7 Tips for Beginners to Invest in Warren Buffett. Warren Buffett once said that experience is the key to investment success. But what about a new investor? What if he is inexperienced? The answer is that if you do not have experience, you can learn from someone like Warren Buffett. Here are 7 investment tips for beginners. 1. Diversified investment is not always a good choice. Many great investors have stressed the importance of diversified investment, but Warren Buffett disagrees. Buffett said diversified investment is only for those who know little about investing. Experienced investors invest in long-term stocks and should have faith in their investment. For example, Facebook shares, which were listed on the stock exchange for the first time in 2012 at $28 per share, are now valued at nearly $159 per share. This means that if you invested money to buy Facebook shares 6 years ago today, you will earn more than 500% without fatigue. Some investors divide the money invested in the shares of many companies because they think that if one company goes bankrupt, they are left with shares in another company. Please note that Mr. Buffett used to advise, do not put all your eggs in one container, which refers only to some experienced investors, and he does not mean to invest money in the count. Dozens of companies say do not put in one container, it can be 2 or 3. The reason why in the beginning you should not invest in a joint venture is because you will find it difficult to focus on keeping track of the information of each company in which you have a stake. Investing in a joint venture can be low risk, but you will have a hard time keeping track of the real situation of all those companies. 2. Invest in yourself first. The decision to invest depends on your ability to analyze the future, so if your ability is weak, the return on investment is weak, but if you are strong, the efficiency of the investment is also high. Buffett once said that the best investment is to invest in self-improvement. Most people do not dare to put their money back to buy stocks, they want to make more money from the exchange of labor. For Buffett, he always spends at least 3 hours reading news and books every day. 3. Believe in yourself to be a successful investor. Buffett says the hardest part is believing in your investment decision. You may like to think that many other people do the right thing, but you always do wrong. Do not think like this: before you invest, you must study, and if you decide to invest, and you have to believe in yourself. To be a successful person, you need to overcome your fears and not focus too much on other people's words. Believe in yourself too much. 4. Invest in any investment option you understand. Buffett said many people think a little before deciding to invest, but others think too much. Warren Buffett warns against investing in areas you do not understand. Buffett explains that before he buys a stake in a company for the first 10 minutes, he needs to know how the company is making money and what are the key factors that can pose a threat to the sector. If he cannot understand it in 10 minutes, he will switch to another company analysis. If it's too messy, you can just look for another company, Buffett advised. 5. Make sure you choose the right source of information to analyze your investment. One of Buffett's other great tricks is that he does not buy a lot of shares of any company that is listed on the front and top pages. Buffett believes in the 99-to-1 rule that most people act on only 1% of financial information, meaning they will sell their stock as soon as the stock price declines. Information is the basis of decision-making, so before investing, you need to find and read reliable information. 6. Learn from your mistakes and move on. You need to know that even Warren Buffett made mistakes and made big mistakes, but he learned all the mistakes he made to be who he is today. Buffett advises to keep a record of the mistakes you have made and to remember not to repeat them. 7. Do not be a short-term investor like day traders. In his memoirs, Buffett said that to get the most out of an investment, buy a stock and leave it alone. He believes that the best stock investment is a long-term investment of more than 10 years. You've probably heard of investing in stocks on a daily basis and ordering over the phone to keep track of prices almost all the time. In my opinion, you should not focus on it because it cannot make you as rich as buying stocks in the long run.